Australia's housing crisis deepens. To discuss what the latest ABS data tells us and perhaps potential solutions, Anthony Landahl joining us from Equilibria Finance. Anthony, good to see you.
Nice to be here.
We know, of course, there is a shortage on the way. Seriously compounded by, look at some of that latest data in terms of building approvals and construction. They're way down. And the government, of course, has that target of building 1.2 million new dwellings by, 2027, is it?
Over the next 5 years, yeah.
Next 5 years, 29, sorry, yeah. Which seems completely unrealistic if this trend continues.
Yeah, I think the latest ABS data, which picks up the numbers as at the end of February, was certainly indicating that we're well behind. And there's a couple of trends probably to focus on. The building approvals for the month were down 1.9%. Probably a couple of numbers to pick up on was housing approvals were about 8,400. The 15-year average is about 9,000, so housing approvals are sitting all right. Unit approved for the month were about 3,600. The 15-year average on them is about 6,600. So we're talking about building more units, and we're well and truly down on the 15-year average on approvals for February. Probably the other number to pick up on, which you touched on, was in 2023, we had 163,620 odd houses commenced. As you touched on, the government's trying to build 1.2 million over the next 5 years. That's about 240,000 a year. So we're well and truly behind on even meeting that target. And a couple of economists have been coming out and saying, look, to stop going backwards, we need to be building about 300,000 dwellings a year, which is even more than the 240,000. So we're going backwards at a time when migration's at record levels too.
But even more problematic is simply the means to build those houses, because we're seeing more and more builders go out of business.
Yeah.
Then you've got to look at the labour force, whether that labour is available to actually build those houses at the same time.
Yeah, there's a confluence of factors. I don't think it's one simple issue. There's costs of construction, as you touched on there, with labour, building supplies. The latest Cordell data indicated that costs of supply and materials are starting to normalise again, which is probably a good sign, but we're seeing builders have been going out of business. We've had issues with zoning, and we've had issues with essentially getting through council, getting approvals through. And we're also having issues with big developers wanting to invest in this. And we're starting to see the New South Wales government and the Labor government, the current Prime Minister, talking about some incentives potentially for investment trusts, giving them some tax incentives to build effectively rent-to-build projects for people to live in. But yeah, we're going backwards in terms of approvals, what we're building, and there's no quick fix in terms of those issues we've just outlined around zoning, around getting things built, around builders actually being able to construct it with the labour and the number of builders.
So Anthony, given that supply-demand mismatch, are we then likely to see more and more upward pressure on housing prices?
We're seeing two things. We're seeing upward pressure on rents. The most recent quarterly data indicated that inflation on rental properties for fully detached houses was at 5.5%. On units, it was 3.3%. So we're seeing a trend with inflation starting to go back to where the RBA, starting to track back to where the RBA wants it. But counter to that, we're seeing a pretty strong inflationary trend on rents. So that's one of the issues, is it's hitting rental markets in an area where nationally we're at about 1% vacancy rates. And yeah, it's propping up the housing prices. We've had 14 consecutive months now of month-on-month increases since we had the fall and the V-shaped recovery we've talked about before, but it's now been 14 months of prices going up since February 2023. So we're not far off 11% above that low point. So yeah, it's putting pressure on the market. Even though supply has softened, we've got rising interest rates, we've got affordability issues, we're seeing a market still growing, which was about 0.6% in March.
And of course then it impacts the capacity to borrow as well, given that potential buyers are going to have to spend more, particularly even just finding a deposit.
Yeah, potential buyers are now looking at other options, to be frank. Rent vesting, we're seeing a lot of millennials. There's been some recent talk about millennials are looking at property, but they're looking at buying investments and renting where they want to live. There's a lot of people now who are getting forced out of some of those major capital cities. The recent growth's been in more Perth, Adelaide and Brisbane, but nationally we're seeing those markets grow, and the regionals have been growing quicker again than the major capitals, indicating that people are still looking at areas outside of Sydney to find that affordability, which you touched on, but that's driving up the prices in those regional markets as well. So there's no quick fix to this. We've got a real problem, and we could have a bit of a lag effect of this lack of construction if we keep these current migration numbers going as they are as well.